I accidentally closed the video that I did on this short on the Euro Yen. I'm in short from 140.71 with an 8-pip stop, and I have not scaled yet. Price did start to move more rapidly the last 15 minutes or so, coming down to the 140.30 level, which is a watch level for me. Let me show you how this looks on the 4-hour. Here's our 4-hour chart, and as you can see, we just broke the lows of this inside candle next to the bearish candle that formed earlier today. I don't know whether we'll be able to break these lows or not, but I'm going to be watching this on a 1-minute chart now and hoping that price can gain enough momentum to go ahead and break these lows. My target is the figure 140. Actually, I think it can go a little lower than that, 139.80, something like that. But I'm almost 40 pips in profit here without a scale. So I'm going to be taking 2/3 of this trade off soon based on what happens with the 1-minute chart. Price is coming up to my watch level. How price reacts if and when it gets to this 140.45 to 140.49 level, that will determine what I do in terms of taking some or all of this trade off. I've just taken 2/3 off this trade at 40 pips. I've moved my stop in to 140.41 to protect the return that's possible on this trade. We're coming down to the prior low. See what happens as price approaches this 140.29 level. If we're able to break that, then I'll keep holding that last third open. Yeah, there we go. I'm going to be watching this very closely. I'm very satisfied with this trade. It's a 1 to 5 if I close it now. So I'll be aggressive in how I manage this last third. Making another new low. Making another new low. I've closed my last third of this trade at 140.31 for 40 pips. That gives me a return of 1 to 5 on this trade, or at my 2% risk, 10% on this trade. I absolutely give the credit for being able to trade like this to what I've learned from Calvin Thornley. The holy grail in forex trading, or any trading for that matter, is use of a small stop. I learned from him how to use a precision stop, and I'm able, from the length of time that I've worked with it, which is well over a year that I've worked with the precision stop, to get out at break even on most of the losses that I would take. I'm able to take no loss or a couple of pips, and I have a very high success rate on my trades because I know what to look for, and I'm trading into trend. Just to show you what we were trading into this in terms of a multi-time frame trend, I'll go through the time frames. Here's our monthly chart, predominant trend to the long on the monthly, but we do have a candle that closed below the prior candle on the monthly. That is significant, and then it was broken to the short. So we have a first break in place on the monthly. Here's our weekly chart, and we have what I'm calling a triple break, a third break on the weekly chart. We have a reversal candle broken to the short. We have a bearish candle broken to the short, and then we have this reversal candle broken to the short. So 3 times that price has been able to fail to go to a higher level, and indicating a short basis on the weekly chart. Here's our daily chart. We came into today with price closed below the 8, so our bias was to the short. As you can see, we've broken the daily candle. And here's our 4-hour. At the time that I entered this trade, I was looking at this impulsive bearish candle as price was retracing into it. Here we are back at the 1 minute, where I closed at 131 for a 1 to 5 return on this particular trade today. Do I think that there'll be another opportunity to enter on a retrace? There might. I probably won't be trading this afternoon. I normally don't, but if I was here and saw price make some kind of an orderly retrace, we've had a big move down. There certainly could be a retrace into the 140.50 level. If that happened and I was trading, I would consider shorting it at that point. Good luck to you in trading the rest of this week.